I see a hurricane coming. I think Bitcoin, the first stop is around 50,000. It would drop to zero. The first stop was around 50,000. I think it's going to 10,000. There's key reasons for that. When gold grabs alpha like it did this year, that's telling us something. That's a warning. And I'm heeding the warning. I'm fearful that we might have a bit of a crash in the stock market. All I know as a strategist is gold is way too stretched for me. Bitcoin's heading lower, so I'm pointing that out. Crude oil is heading lower, so I'm pointing that out. And to me, I'm just pointing out the risks of the correction in the stock market.
Today, we dive into the contrarian and highly cautious analysis of Mike McGlone, senior commodity strategist. Known for his prescient bullish calls on gold when it was unpopular, McGlone has now switched to his risk management hand. His message is stark: we are at peak euphoria and the crash is coming. While others predict Bitcoin to millions and gold to the moon, McGlone argues that gold is frighteningly stretched. Bitcoin is a leading indicator for a broader collapse heading back to $10,000, and the most expensive stock market in history is teetering on the edge. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
Yes, to me, when you have a key theme that kind of gets thrown down on a mat, then comes back a little bit, you have to revisit. And that to me is Bitcoin put in a significant, cryptos put in a significant peak in 2024. There's good reasons for that. I don't have to mention them all, but the final one was President Trump getting elected on the back of tilting over from a zealot to a convert on cryptos. And then we had all this massive speculative excesses. And now I think Bitcoin, the first stop is around 50,000. You look at it the last 5 years, it's been hovering each year. It's touched around 50,000. And by the way, I made the same call in 2018. It would drop to zero. I was 70% right. Some people say 30% wrong. From around 10,000 went to 3,000. So I do think the first stop was around 50,000. I think it's going to 10,000. There's key reasons for that. First, the world changed. Now what's different now is no longer buying any kind of cryptos is no longer independent of most governments. Now you're dependent upon the U.S. government, and you're also supporting Trump. The Trump family, Trump administration's officials who are all invested in this space. And the key thing is, back when I got really bullish, I went to see Michael Saylor last night in an event. When I was really bullish in 2020, as was he jumped on board when it was around 10,000. Yeah, I called for a 10x. Now everybody's bullish. He's doubling down with the 10x, and I think it's just going to rotate back down. The difference is, the bottom line fact is, and people can dispute this as much as they want, there is about 28 million cryptocurrencies on coinmarketcap.com. There's an unlimited supply of, you can call them companions. And there was one in 2009, 2000, and that was Bitcoin. I look at precious metals, there's one, and then there's three others: gold, silver, platinum, and palladium. Now, you can't really create more of those, but in cryptos, there's unlimited supply. And the key lesson you learn in commodities is embrace the technology, but not the price. And the key thing about the technology in this space is, sure, there's a lot of equities that are doing well, but they can create more with less everyday cryptocurrencies. And Bitcoin has the advantage of being one, but I do think it's going to head back to 10,000. Just see how that works out next year. And that also is on the back of the stock market dropping and yields dropping next year.
Well, you can't change the hard cap on Bitcoin. So maybe in the world of infinite printing of new cryptos, Bitcoin stands out as the dominant currency, perhaps. And let's just take a look at what happens if we do Bitcoin dominance. Perhaps Bitcoin dominance goes up. What do you think?
Oh, sure. Oh, completely. It's just some of these silly things that are, I love to look at Dogecoin and Shiba Inu. Dogecoin peaked at $60 billion last year. I mean, it tracks nothing. It was launched as a joke. And right now it's about 20 billion. Same with Shiba Inu. It's a joke. It peaked at about 20 billion last year, and right now it's about 4 billion. I think they're going to zero. That's not a profound thing. A lot of crypto people think the same thing. A lot of crypto people hope that stuff will get flushed out. And then we can reset the whole market. The big area why I have a difference is, a lot of them tell me that Bitcoin is not correlated, and I point out they're all correlated. I just look at the market vectors small cap index. Its correlation with Bitcoin on 48-month basis is 0.84. Now, that in the past was a lot less, but they're all linked. They're all going down. I think it's just started. We need some kind of trigger for it to end. And I think right now it's going to accelerate when the U.S. stock market backs up a little. Just a little move back to the 200-day moving average in S&P 500, which is right around 6,200, would be the first sign of, I think, a dip to buy in cryptos. Also, a key thing is we have the VIX. The VIX is buried at 17. Anytime the VIX pops around, when it popped around 60 early in the year, that was the time to buy cryptos. And when it popped around 26 just a few weeks ago, that was the time to buy cryptos. But that and volatility indications from, it's been one of the key market indicators I've ever had, is volatility in stock markets way too low to be considering adding to new longs and risk assets, and cryptos are the riskiest of them. And then let's look at some of the key leading indicators. MicroStrategy. MicroStrategy was a key leading indicator on the way up last year, and it's already tilted lower. You have the 200-day moving average and Bitcoin rolling over, MicroStrategy rolling over. You see the trends there? The next one is the 200-day moving average in S&P 500 to roll over. It stops at, I don't know, I think the risks are they all follow cryptos.
And cryptos all follow Bitcoin, and Bitcoin follows stocks. Is that the thesis here?
Well, in this case, it's leading. And I think it's leading because it's peaked. We've had a classic, David was one of the classic signs of a peak. Everything that happened in 2024, the halving, the ETFs, stock market record high, and certainly Mr. Trump flipping over are all reasons for it to have peaked. But also it's the just the fact that the rollover factor and the pile on in ETFs. There's some of that's been the OGs switching out to more safer rather than have to worry about the keys in here and going to ETFs, but into poor performance. I mean, the performance of the all broad crypto market and Bitcoin has been horrible for over a year now. High volatility, poor performance, and people say, that's your typical risk managers looking at this and say, no, sorry, thank you. Yeah, it's had a great run before it got launched in ETFs in the mainstream, but now it's in mainstream. We all know the rule of the back test. The back test was great, but now it's time to perform. It's over, I think. And, I'm here to express my views. My view is the crypto rally is over. For now, it's people call it crypto winter. I do love some of the nomenclature. It's just a question of how far it goes, and we'd love to see signals for it to end. But to me, it's barely started because like I said, the stock market still just needs a little correction to just cleanse some of the excesses initially. You all know what the first say is, it's a healthy correction. We haven't even had that yet.
Some people say Bitcoin is digital gold. You're clearly not in that camp, given that you think gold's going to 5,000, even though you're cautiously optimistic on gold, and you're not at all optimistic on Bitcoin right now. So diverging paths, they can't be the same type of asset if they're diverging in outlook, right?
So A Digital Gold by Nathaniel Popper, who is now at Bloomberg, was one of the first books I really dug into in 2017 in cryptos. And I was obviously very bullish. I waited till 2019 to get bullish, around 5,000. But yeah, I love that, but it's not. Like I said, so here's the key difference. There's gold, silver, platinum, and palladium. There's gold and then 3 other precious metals. There's Bitcoin and then 28 million companions. It's just the difference is it was the first cryptocurrency. Now there's millions, and I think sometimes it trades more like leveraged stock market. Sometimes it trades like gold. And now I think it's trading like a highly speculative digital asset that's going to just reverting back to a lower price cure. And I don't think it's anywhere near that right now as we speak, around 87,000.
Anything you're bullish on for 2026?
Treasury bonds. I think treasury bond prices will be.
Besides treasuries.
That's the problem. So here's the way I look at it. And I have to admit some of my weaknesses. I have not been a fan of the stock market for too long, but I found some great alpha and pointed out great alpha in Bitcoin and gold. Now, I jumped off the Bitcoin horse last year, and to me that alpha was over, and it's proving strong this year, and I'm jumping off the gold alpha this year. And it's a key thing that really scares me about this year, David, is when gold grabs alpha like it did this year. I mean, there's nothing except just a few small peripheral assets that are outperforming gold, particularly on a risk-adjusted basis this year. That's telling us something. That's a warning, and I'm heeding the warning, and that's why I say you're supposed to just shift over to risk-off assets like treasuries. To me, that's the bias for next year, and I'm fearful that we might have a bit of a crash in the market, stock market.
I mean, what are we looking at? 30%, 50%? What's a crash for you? 25% is a crash technically.
It's the term. It's the term that people use. Let's use 1987 as an example. The S&P 500 ended up the year with 2% gain. Most people don't remember it that way, but just a normal reversion. We'll see. Maybe gold and the S&P 500 meet at 5,000. I don't know for sure, but all I know as a strategist is gold is way too stretched for me to be recommending. Be putting out my very bullish comments that I did forever. And Bitcoin's heading lower, so I'm pointing that out. Crude oil is heading lower, so I'm pointing that out. And to me, I'm just pointing out the risks of just a normal, healthy correction in the stock market. That's what people call it. We'll just get back to that 200-day moving average and go from there. But for now, towards the end of the year, the key thing is remember is what's happening with the macro big picture. This is the most expensive stock market in history versus GDP versus the rest of the world versus housing and things like that. And maybe it has a worthy reason to back up now, and that is we do have a president who says he's going to make the world great, but it's kind of hard to get much greater than the valuation of the stock market. And this was a theme I had a year ago before the election of President Trump. My thought was whoever was the next president was going to have the misfortune of being the wrong side of the cycle, like President Hoover. This is just how expensive the stock market is, and they keep trying to pump it up. But what's happening by pumping up the stock market and talking up risk assets and pushing back on the Fed and creating tariffs? It's all elevating inflation, which means incumbents do not get elected.
McGlone identifies the classic signs of a market peak in 2024: the halving, the launch of ETFs, record stock market highs, and crucially, President Trump flipping from a crypto skeptic to a zealot. This massive speculative excess marks the top of the cycle.
Fundamentally bullish gold strategist, and the key thing is I had to take the pain. 21, 22, 23. I kept saying it's going above 2,000. I was the idiot. I got thrown down to the mat and finally it broke up higher. So that was the time to be accumulating and getting long in bullish gold. But now that's popped up to, some say, 3 standard deviations versus a 60-month moving average. I like to say it's just the most stretch versus most moving averages. I'll use 60-month as one. Since the late 70s, early 80s, I switch over to my risk management hat, and I don't care about the fundamentals in these levels. Honestly, as a risk manager, this is not the level to get overweight long gold. Historically, it proves it can get to 5,000 or it can get to 4,000. Now, right now, the momentum's up. It's going to continue up. But if and or when we get this normal correction in risk assets, everything is going to go down. That's what happened in 2008. So also, I want to give a little example of gold's companion, silver. Silver this year has had its best year since 1979. It's up over 20%, and now they're somewhat linked. Now, that's one thing I was really surprised by, is how much silver's caught up versus gold. But the key thing to remember is in 1979, silver ended the year at $32 an ounce. It was up 400% this year, or that year. This year's low was $28 an ounce. So you had about 50 years of nothingness. Yeah, you get pops, but that's the key thing to remember about things like commodities like this. When they pop this much, history proves you're not supposed to go out of your way to be overweight long gold or silver at these levels. And that's why I said at the beginning, I tilt over to anything that's kind of risk off. And gold is typically risk off, but when it goes this far, just be careful. And that's why I tilt over to treasuries.
But okay, so let me just summarize your view on gold in maybe a few sentences. So you're cautious on gold given how far it's run, understandable, but you still think $5,000 in the cards. So that's still about a 20% upside. Let me help us understand how exactly you're positioned then, how one should be positioned given your sentiment.
They can position any way you want. I'm a strategist, and I have to caution that the key fact I like to use is overweight long gold or new long gold positions. History does not prove they do well from such stretched levels. Fact. Just maybe it's changed this time. So here's the key thing. I just put gold and the word frightening in the same sentence for the same reason, because it's never moved at this velocity, David, ever. This far stretch, like 85% above a 60-month moving average with 120-day or stock market volatility this low. So my indication is gold's telling me stock market's volatility is going to go up, and it usually means stock market prices go down. Business sometimes the hard way is never be shy about taking profits.
Yeah.
Just question how much. And the key thing is also this selling when they're yelling mantra. That was what really triggered me about cryptos last year. I said I wanted to be selling because they're yelling. And I'm getting that same feeling in gold. Now, the little difference is I'm more willing as a strategist to be short cryptos, a broad crypto market, because I think a lot of them are going to go to zero. But being short gold's another story. Just if you've been overweight long and been bullish like me, it's just the essence of a strategist when I can get something right to be able to say, oh, it never hurts to take some profits.
So, where does the risk manager hide? Treasuries. McGlone is tilting heavily towards risk-off assets. When gold outperforms everything else to this degree, it is a warning siren. He is heeding that warning by moving into the safety of U.S. Treasury bonds, anticipating that yields will drop as the stock market corrects and investors flee to safety. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.